What if I told you a single number? That same number is flashing a warning more urgent than anything we've seen in modern history. This isn't just a market indicator, it's a geological truth written into the fabric of our planet. For every ounce of gold in the Earth's crust, there are roughly 19 ounces of silver. Monarchs across Europe, they built their monetary systems around this stable, keeping the exchange between gold and silver locked between 12-1 and 16-1. But honest money is the enemy of empires in decline. It didn't start with a declaration of war or a political scandal to fund endless wars and pacify the masses. Roman emperors did the one thing they could: they debased their currency. By the time of Nero, it had dropped to 80%. That so-called silver coin was little more than copper washed with a thin silver film, just 5% pure. The real silver had vanished into private hoards, leaving the public with worthless metal. The first hyperinflation in Western history. What? All because they broke the link between money and physical reality. It's a blueprint, one we are following today. You might think Rome was a primitive anomaly. Throughout much of the 19th century, the US and Europe operated on a bimetallic standard. The gold-silver ratio held firm near 16-1, the bedrock of global trade. But in 1873, Congress passed the Coinage Act, effectively demonetizing silver. By stripping silver of its monetary status, the government artificially spiked the value of gold. What followed was the Long Depression, a period of crushing deflation, bankruptcies, and social unrest. When you break the ratio, you alter the destiny of nations. As breadlines grew, the gold-silver ratio screamed to an unheard of 97-1. Think about that. Nearly 100 ounces of silver for 1 ounce of gold. Everyone was fleeing into gold for survival. And just as the ratio predicted, it broke. Great Britain abandoned the gold standard. In response, FDR committed one of the most drastic acts in financial history. The government had to manipulate the market buying silver to force the ratio down. Optimism was everywhere, except in the charts. The ratio saw the rot before the politicians did. We all remember Lehman Brothers, the panic, the collapse. But months before the fall, the ratio sat calmly near 50. Then, as the subprime crisis spread, it violently spiked to 84. When the system breaks, industry halts, no one buys silver. That divergence is the heartbeat of crisis. The ratio did something it had never done in 5,000 years of recorded history. It didn't just spike, it went vertical, hitting 125.01. Investors sold everything, anything, to get dollars. With a defibrillator made of infinite cash, the Fed printed roughly 40% of all dollars in existence in just 18 months. But they didn't fix the problem, they just put it on life support. Paid for by the inflation you feel every time you go to the grocery store. So why is the ratio still being manipulated? Because the entire exorbitant privilege of the US dollar depends on it. The world uses dollars because they believe the dollar is as good as gold. If the gold-silver ratio reflected the true glut of cash in the system, in paper markets like the COMEX and LBMA, traders buy and sell silver contracts, paper promises, without ever touching real metal. For every ounce of physical silver in a vault, there are hundreds of paper claims. By flooding this paper market, they suppress the price. It lets America buy real resources from the world at a discount. While the West plays with paper, the East is playing for keeps. China, India, Russia, they aren't buying paper contracts. They see the high ratio not as a warning, but as a clearance sale. China dominates solar panel production, an industry mathematically addicted to silver. They're stacking the metal while it's cheap. India imports staggering amounts of silver, a cultural and financial imperative. This is the greatest wealth transfer in human history, happening in plain sight. And now, the laws of nature are entering the chat. Silver isn't just money, it's the most conductive metal on Earth. You can't build a solar panel, an electric vehicle, or an advanced microchip without it. Yet the ratio says silver is cheap and abundant. That signal is a lie, one that discourages new mining precisely when we need it most. What happens when industrial giants like Apple or Samsung realize the physical vaults are running empty?